Hello, everyone. Welcome. Thank you so much for joining. We are going to talk about Esférico's carbon credit project, open for investment through Goparity, an impact finance platform. And this is how we're going to spend the next hour together. Francisco will start by introducing Esférico, Radica, and the mission driving their work. And then I'll walk you through what Goparity is and how impact investing turns everyday money into real environmental change. From there, we'll dive into the project itself, the carbon credits behind it, what makes Esférico stand out, and exactly how you can invest. Let me start by introducing us properly. I'm Adriana, a marketing and content specialist at Goparity, and Francisco is Radica's CEO and co-founder, and he'll tell you all about Esférico and Radica right now. Francisco, the floor is yours.
Well, good evening all, and thank you so much for making this call. It's great to meet you all and to present Radica and Esférico and the great opportunity that we're launching. In essence, Radica is a mix, is the union between two entities, Alberami, which is the Italian counterpart that was born in 2021 with the mission of creating carbon farming projects, which we'll go into more details about what carbon farming project is or are, and the union with Esférico, which is a Spanish agri-tech company based in Murcia. So Esférico joined the Alberami family, and then it was morphed into Radica last year, in July of last year. And in essence, Esférico is the technology and MRV, so the monitoring, reporting, and verification arm of Alberami, of Radica. Sorry, it's many names, but we'll call it Radica from now on, so that we're clear. So together, essentially what we do is we help, on the one side, we help farmers adopt regenerative farming practices. So we assist the farmer in adopting practices which are beneficial to soil, to agronomy, to production, and to obviously carbon sequestration. And we monitor the effect of these practices using a combination of technologies. In essence, we use soil sampling, geospatial analysis, and digital monitoring to effectively measure what happens, as a result of the practices in terms of carbon sequestration. So carbon is sequestered through, obviously, a series of practices. We promote a series of 13 different practices. And today, the program covers about 700 farmers, mainly Italy, or predominantly or exclusively, I should say, Italy at the moment. We are in 15 different regions of Italy. We're following the work of 700 different farmers over 30,000 hectares. And so far, since 2022 to 2025, we have generated a cumulative 84,000 tons of CO2 sequestered. These are effective tons of CO2. And so far this year, because we've started actually selling en masse our credits as of effectively this year, we already distributed 600,000 euros to farmers. So the process, just to give you a background on how the carbon market works. So on the one hand, again, we help the farmer generate the carbon credits. And on the other side, we help corporates, big corporates, purchase these carbon credits as part of their CSR or ESG goals. So they want to basically reduce or offset some of their residual emissions. So after they have implemented measures within the companies to reduce their emissions, then the residual part can be offset using carbon removal credits. Hopefully removal, not just avoidance. But so they use our credits to compensate or offset part of those residual emissions. And Radica takes that money that comes from corporates, the likes of Lufthansa, big banks, big automobile companies are within our clients. And we take the funds and we distribute 75% of those proceeds directly to the farmers, which are obviously the main actor that has contributed to the company becoming potentially net zero, or as we'll see, or potentially carbon neutral. So the main issue within this carbon project is what is called the timing gap. So the time it takes from the moment you onboard the farmer to the time the farmer gets paid, it's usually around 18 months. So just to put it simply, a farmer will register with a program today, they will start adopting the practices. Those practices will have an effect on soil within, let's say, 12 to 18 months or 12 months at the very minimum. And by the time we go back to the farmer to measure, the effect of those farming practices, 12 to 18 months will have passed, and then we'll have to do the monitoring report, and we do all the actual issuance of the credits and then selling the credits. So this timing gap essentially creates a liquidity sort of constraint on Radica, which is why we are now sort of putting forward this campaign in order to sort of shorten or reduce the strain on our cash, because obviously we know that the credits will be sold. In fact, we sold more credits than we actually generated so far, for future delivery. So we need essentially the cash to get to the point where obviously we are able to then distribute the funds to the farmer. So this is it all ties in with the actual process of generating and selling the carbon credits and then distributing to the farmers. Thank you.
Thank you so much, Francisco. That was a really inspiring overview. I have quite a few questions to ask you, but first I will quickly introduce Goparity so that everyone watching us can understand exactly where this opportunity is coming from. So, Goparity is an impact finance app that lets people and companies put their money to work for good. We do this by allowing anyone to invest in organizations such as Esférico, whose projects contribute to the UN Sustainable Development Goals. Three things matter most to us: accessibility, you can start investing from just 20 euros, transparency, no small print anywhere, and real impact. We track and report on every euro invested. In short, our goal is very simple. We want to empower people and companies to use their money for good, and this means divesting from harmful industries and investing in impact instead. This is called impact investment, making investments that aim to generate positive social and environmental outcomes alongside financial returns. As Andres Lerner writes in his book, Mind Your Money, which I highly recommend, impact investing is one action that's 20 times more effective than reducing meat consumption, flights, and car use combined. Here is a number that says it best. $1,000 sitting in a traditional bank account contributes to around 305 kilos of CO2 to the atmosphere every year. That same 1,000 invested through Goparity saves an estimated 745 kilos of CO2 a year. So the same money, but a very, very different impact. Now, none of this works because of one investor alone. It works because of many, and that's the heart of how Goparity works. Thousands of people, each investing from as little as 20 euros, coming together to fund a project that creates real impact. The company gets the capital it needs to grow. You get a financial return and full visibility into the impact your money is creating, and the planet gets real, measurable change. Everybody wins. That loop, lending money and getting it back with interest, is called crowdlending. It lets you lend directly to a company through a regulated platform like Goparity. You choose the amount, the company repays your capital plus interest over a fixed term, and everything is set out in a loan agreement you accept before investing. Every campaign also comes with a detailed risk analysis carried out by our team before it's available to investors, and a key investment information sheet laying out terms in full. Now that you know how crowdlending works, let me walk you through what investing in Esférico actually looks like. Every campaign on Goparity carries a risk rating from A+, the lowest risk, to D, the highest. This one is rated B-. The loan runs for 24 months. The first 6 months are what we call the grace period, and during this time, you're already earning interest on your investment. You just don't get any of the capital back yet. And from month 7 onwards, your monthly payments includes both interest and capital all the way through the end of the term. Your return is what we call the nominal interest rate. For this campaign, that's 6.3% a year. The yield you earn simply for putting your money to work here. As for the campaign itself, the minimum needed for the project to go ahead is 400,000 euros, but the amount raised can go up to 500,000 euros. You can simulate your investment and how much you can earn with our simulator. And here is a little extra for all of you watching right now. Today only, Esférico is offering you a gift. If you invest 100 euros or more, 20 euros will be added automatically to your investment. It's exclusive to this webinar and you have 1 week to use it. The link to redeem it is in the chat, but you can also scan this QR code. Now, Francisco, before we jump into the Q&A, and by the way, everyone, feel free to drop your questions in the chat right now. I'd love to hear more from you about this project. For those of us hearing about it for the first time, in a very simple terms, what exactly is a carbon credit and how does it relate to positive environmental impact?
We could talk about this single question for about 3-4 hours and go more, all days actually. But in essence, a carbon credit is a unit of measure that quantifies a reduction or an avoidance of emission that has been created by a project somewhere. That's then used by a third party to partially offset some of their emissions. Essentially, a carbon credit usually represents a ton of CO2 or a ton of CO2 equivalent when you're talking about different types of projects involving, for example, methane or other projects, but essentially it's a ton of CO2 equivalent sequestered or avoided. The difference is big because you can only sequester new emission when you're applying new practices, whilst you can avoid the emissions of CO2 when you are essentially protecting something that today is absorbing, but in the case of, for example, in the absence of a project, then that sequestration will sort of be less. So one is a removal, one is an avoidance. We only deal with removal. So we only promote new practices that generate new removals. And the key point between the two is that removals are much more valuable than avoidance because you can only, as a company, you can only achieve carbon neutrality or net zero by using removal credits. This is what the new CSRD and the new legislations are going towards. So it's very important that the two are distinguished. Yeah.
Yes, that's really interesting that distinguish. And thank you so much for sharing. And how are your carbon credits independently verified?
So we have developed a project or a methodology, and we've combined multiple methodologies to develop our project, mainly because we look at two different so-called carbon pools. So we measure the carbon that's stored in soil and the carbon that's stored in above ground and below ground biomass, so trees essentially. And we've developed the project according to a standard. So in our case is the International Carbon Registry Standard. So they provide the guidelines upon which a project is built. And then there is a third party, which in this carbon project world is called a VVB, Validation and Verification Body, that sits between the project developer, so us in this case, and the standard. And they essentially enforce the rules of the registry. So in essence, again, once you develop a project and you assess that a farm has sequestered X amount of carbon, then at the end of the period, the monitoring period, this VVB will come to the field and will say, okay, I have ascertained that the activities have actually been implemented. So the estimate or the measurements that Radica in this case has provided, they correspond to the truth. And so the credits, the corresponding credits, can then be issued by the standard. So it's a circle where basically all of the parties sort of check each other's work, in essence, all in the hope of creating a high integrity credit for the buyer, which is key.
Perfect. Thank you so much for sharing. I could ask you questions until tomorrow and we could stay here chatting, but I really want to to get to the questions that everyone watching may have, and also some of the questions that we got in our registration form. So we have a question from Rosa. So, are you selling credits to big corps, not small and medium enterprises?
We're selling to basically everyone that we buy, with the small caveat that we tend not to sell to industries that do not align with our values. So we have clients that are very tiny corporates, like even like a doctor's office that want to buy 2 tons, and we sell to huge corporates like Lufthansa, for example. So we don't discriminate according to size, but we do discriminate according to values, which is, I think, it's very important in this case.
Yes, definitely. I think Artur has a question. He raised his hand. Hi, Artur.
So I have two questions. I'm not sure if I'm allowed to make two questions. Yeah. The first one is, what is exactly the business model? So you make money from selling the credits and from the farmers, or only from selling the credits? And the second one is, how this money that you are lending now, how this money will help reduce that time gap that you mentioned in the beginning of the 18 months.
Okay, so the first two questions, sorry, the first question is we take a percentage of the credits that we generate, so 25% usually, and then we also charge the farmer a set amount of like 15 euros per hectare, which is only paid after we help them generate the credits. So it's deducted from the revenue. There's no money up front, so essentially the farmer joins for free, and then once we sell the credits, we distribute is 25% usually. The second question is the timing gap. The timing gap essentially creates a constraint on cash flow, which is usually related to the monitoring. So in the process of monitoring what happens on the field, we have to send technicians to take soil samples. We spend money on lab results. Obviously we have a big staff. We are now 31 people, so we have OPEX, we have salaries, we have monitoring costs, we have software costs. We have all of the costs that you would assume that a company that uses a lot of technology will have, and obviously people. So this is key. And in essence, we are selling credits onto a very mature market now. So we have a team of salespeople that go out there and sell our credits to platforms, and those need to be paid before we get the money. So this essentially helps us continue to grow. And obviously, this is the different part with Esférico, or the additional part with Esférico in Spain, is that we're now replicating exactly what we have done in Italy in Spain. So we are now launching our second project in Spain. Well, it starts from Spain, but it's a Mediterranean project. It's called Agroecology Med, as opposed to Agroecology Italy, which is the Italian project. So we now need, obviously, CapEx for Spain as well. So it's a mixture of extending the project in Italy and starting the new project in Spain. I hope that answers your question.
Okay, yeah, thank you.
Thank you.
Thank you so much, Artur, for your question. I think we can go to the questions that we received in the registration form, because there were quite a lot and a lot of really interesting questions. So I'll start by reading this one. Are there really companies that are carbon neutral? Can we truly trust the information companies provide when they claim to be carbon neutral, or is it possible to disguise the real situation? I think that was a very asked questions.
It's a very, very leading question. Anyway, I think there are very, very few companies that are carbon neutral, like organically, let's say. Mainly because it's very difficult. Unless you're a company that does services and you have a very tiny operation footprint, and you produce your own energy and you don't pollute anything, but it's very difficult to be carbon neutral. I think it's more about being net zero. So you're offset. You do have emissions. You might have emission, but you neutralize them by, for example, efficiency within your operations, with the use of carbon credits. So it's yes, there are some companies that are carbon neutral, native carbon neutral, but they're very, very tiny. And can you trust the information companies provide when they claim to be carbon neutral? Trust is no longer the word. Fortunately, there are regulations that enforce that whatever claim you make as a company has to be backed by data. And if it's not backed by data, and if the data is not true, then you are potentially running the risk of very, very high fines, like the greenwashing claim or the green directive. Some of those rules, CSRD new rules. So all the rules, all the regulations are coming on board to prevent companies from greenwashing, which is the biggest risk in both in carbon credit and in non-carbon neutrality claims. So yes and no is the answer.
Yes, very complex as it is to be expected in a team like this. We got an interesting question regarding the timing gap and the grace period. So Thomas asked, how is a 6-month grace period before paying back not only interest but also principal compatible with the 18 months time gap mentioned in the slides by Francesco?
Yeah. So we requested the 6 months grace period because besides the facility with Goparity, we also have access to grants, innovation grants. We have been very fortunate to run a very innovative project and to have been awarded several grants, both at European level and at national level. So essentially, the funds from Goparity sort of bridge the gap between us getting the funds from grants as well, or anticipating some of the expenses that are covered by the grants, which will then be covered in a later time. So usually with grants, especially with national grants, not with European, you have to spend the money before you get it. And this is part of it. So we have obviously to create liquidity in order to spend the money that will then come back. But 6 months at the moment is also the time it takes from, let's say, today until the start of the new year, which is when revenues from credit sale will also come in from past years. So it's all about managing liquidity. This is essentially the name of the game in this in this venture.
Perfect. Thank you so much for the clarification. I hope that was clear, Thomas. If not, you can drop your follow-up question in the chat. Now, one of the other questions we got quite frequently in the registration form was, how does the carbon credit market work in practice? How is the price of a carbon credit formed?
Yeah. This is very complex, but luckily we are moving towards a more transparent sort of system. But the way it has normally worked is that each project makes its own prices. Okay, there might be, for example, sort of agreed numbers, agreed figures according to a type of project. For example, a renewable project might cost X, in a specific country. But when you're talking about very niche project in niche jurisdictions, like in our case, we are the only carbon project developer in Italy issuing this type of credits. The way you justify a price versus another price is that you say, okay, I'll explain you my case, just to give you some real context. In our case, we know that an Italian farmer has to be paid a certain amount in order to change the practices that he normally adopts in his farm. This is, we've sort of calculated this to be about 150 to 250 euros per hectare. Knowing that a woody crop, for example, olive trees, the way, the main crop that we work with the adoption of 4 to 5 practices, sequestered on average 4 to 5 tons of CO2 per hectare, so 5 credits essentially. You cannot possibly sell those credits less than, for example, 50 euros in order for you to distribute, 200 euros to the farmer. So we basically started from looking at what does the farmer need in order to be receptive to these new farming practices, and then we basically priced the credits according to that. Obviously, we had to ensure that the credit is high value, high integrity.
Mm-hmm.
So we went and did, ratings. We went. We had insurance. We had, carbon non-delivery risk insurance to the credit. So all of the sort of hallmarks features that a high integrity carbon credit has to have in order to then command such a high price. You can find credits for 50 cents in the markets. So you can understand that when we are faced with this question, you say, why does your credit cost 55 euros when we can find credits for 50 cents? This is where you basically go in and you explain the differences between one and the other. So it's all about the impact you want to make and how you drive the impact at the farm level, not just, yeah.
Yes, you raised a very interesting point there that I'd love to know more about, and I'm sure that a lot of people watching may share it too. When you talk about a high integrity carbon credit, you refer to measuring it and rating it. What variables do you use to establish this rating? What makes one carbon credit high integrity, if I'm
Better
making
than the
that
other.
softly?
Yeah. So a carbon credit to be worthy of being used by a corporate, so compliance grade carbon credit, has to have three hallmarks minimum. I mean, three principal hallmarks. Has to be additional. So the project has to have, created the impact that it says is creating. It has to be permanent. So it has to have a long permanent. So when I promote a farming practice and that practice is respected, so to speak, for many years, 15 years in our case, then you can ensure that the carbon sequestered as a consequence of the adoption of that practice is 15 years. So that's the permanence, and that's what's valued by buyers. And then it has to be measured conservatively. It cannot be overstated. It cannot be double counted. It cannot be and ideally, it has to be measured on an ex post basis, so after the facts. So you
Yes.
adopt the practice and then you measure. And this is usually the way a high quality carbon credit is formed. Then on the rating side, then there are obviously third parties. Now there are rating agencies, like in the stock market, you have Standard and Poor and other companies. In the carbon market now, there is an emergence of rating agencies, the two big ones being BitZero and Silvera, and we are rated by BitZero, and the project was rated and re-rated also this year as triple B. So triple B is obviously compliance grade, it's very high. I mean, the current project, the Italian project, sits amongst the top 5% of all projects in the world for this type of, project, soil-based, soil agriculture. So again, this is all in the interest of making the credit as appealing as possible to big corporates, because that's big corporates and also small corporates, but making a credit that's worthy of its price.
Perfect. Thank you so much. I think we can move on to the next question. What does success look like for Radica beyond the number of carbon credits issued? What legacy do you hope the company will create for agriculture and climate?
Great question. Great question indeed. Okay, besides the number of credits and besides the number of hectares, I mean, I think what distinguishes us from other players in the market essentially is the fact that we work with small and medium-sized farmers. I mean, the very incipit of the project when we started in our region of Puglia was to help local olive farmers deal with the Xylella fastidiosa outbreak, which is still present, by the way. So Xylella fastidiosa, if you don't know, it's a disease that's killing a lot of olive trees in the south of Italy. So the initial goal was to help the small farmers, as small as 1 hectare. So I think we've kept some of the focus on those small farmers. I mean, obviously it cannot be 1 hectare anymore. It's the smallest farm is 3 hectares. But what we're hoping is that beyond the carbon, beyond the revenue and beyond the money, obviously has to create a system that's more resilient, because a more resilient ecosystem or farming ecosystem is key if we want to preserve, livelihood, food security, food integrity, and high quality nutritious food. So this is, besides being a carbon project, is also an ecosystem and land restoration and food security program. So this is what I hope that by 2030, when we aim to get to 500,000 hectares, then it will be made of small little farms that have trusted the program from the outset and have strengthened the resilience of their ecosystem, because that's what it is. I mean, we have 40 degrees today in Puglia, and you can see the land is almost desert, whilst in the project we follow, where there is a thick coat of cover crop, the soil is still humid. So that's resilience. You're increasing resilience in the ecosystem. So that's what I'm hoping the picture will look like in 10 years time.
Perfect. And I think resilience really is the most accurate word to describe the impact you are creating. And thank you so much for sharing. What are the biggest scaling challenges in carbon removal efforts?
Changing regulations. Changing regulations are for certain the challenges, and so changing regulations, what they do is they create a system of fear, essentially, or uncertainty, because what we've seen, with the latest, over the last couple of years, with what happens with some very prominent skeptics of the carbon market or the green, let's call it the green agenda, is that they created a system where companies have just found an excuse not to act on their emissions, which is crazy. Which we think, we look all around, there's disasters all around. Okay, you can say they're man-made, they're not man-made, but the weather is changing, the climate is changing. So if regulations don't go hand in hand with the actual problem, then we have a system where the big polluters just keep polluting because they have an excuse not to do anything about it. So this is the biggest thing. And obviously you cannot, tax them on their emissions, but you have to create a system where they are incentivized to do good, because obviously they have the possibility to do it. They have to share. Even 1% of the revenue is sufficient to change the course of what we're going towards, which is a cliff, essentially, a climate cliff.
Yeah. You talked about regulation, and we just got a question regarding that topic as well. Is there any specific ISO which regulates the carbon emission in agriculture that secure agricultures to adhere to program from the other hand? Not sure if I read that very correctly.
Let me reread it. The specific ISO which regulate carbon emission in agriculture, not in agriculture, but I mean the ISO 1464 family, or in 1460 family, it's the ISO, the primary ISO that deals with carbon emissions, carbon accounting, carbon quantifying, carbon assessment. So there is a whole family of ISO, but I don't think there is a specific one for agriculture. I might be wrong. I'll check. If I find something different, then I'll post the response.
Thank you, Francisco.
Good
We
question.
also
Yeah, the last one. How do you identify farmers to design renovation investment project on this farm? So at the moment, and this is also part of why we're raising now again, the way we have worked in Italy up to date, we have essentially generated leads through Meta, so Instagram, Facebook. So an individual farmer will approach us and say, okay, I'm interested in your program. I'm interested in making more money, essentially, from adopting these farming practices. Can you help me? So we guided the farmer to join the program, and then we do that on an individual basis. Because we are receiving so much interest in the program, we are receiving 20 to 25 requests every day from individual farmers. The model, unfortunately, is kind of stalling because there's too much demand, which is a good thing in a way, but it's a bad thing because we cannot always deal with this high number of demand. So we are now switching the model to a cooperative and association-based onboarding sort of structure. So what we do is essentially we go out to big producing cooperative, olive farmers, cereal farmers in group, and we say, okay, we would like to work with the cooperative and the members of the cooperative to allow a large number of farms to join at once. So you essentially have one stakeholder that you deal with, not 500, for example, and so that makes a faster scaling. This is the approach that we are starting now in Spain. We are starting directly with this cooperative approach. Obviously, in hindsight, we should have started with this program, with this framework in Italy 5 years ago, but 5 years ago there was no carbon farming in Italy. We sort of invented this program, so we learned from our mistakes, but also there was no big market 5 years ago. Now there is a market, and the market is improving. So it's the model change sort of suits the market conditions now.
Perfect. And Rafael also asks, in which countries, provinces are you acting now? Is there any plan for Portugal?
So primarily now the active farms are in Italy. We are now moving to Spain, Spain everywhere. We are in 15 regions of Italy, and then we are starting from Spain anywhere. Essentially, we just opened, we just let loose some salespeople to find farms and cooperatives in Spain, anywhere. Yes, there are intentions to go to Portugal because the new program is called Agroecology Med, which is obviously Mediterranean, which will target Spain, Greece, Portugal, and then all of the Northern African countries, so Algeria, Tunisia, Morocco, and Turkey. So the whole Med will be covered, hopefully by 2030, so over the next 4 or 5 years.
Great, thank you so much.
And let me just add why we haven't done it yet in Greece or Portugal. Mainly because it suffers even worse problems that we have in Italy, which is land fragmentation. So it's the farming community or the farming landscape is made up of very small pieces of land, which is very difficult to monitor, and which is something that we've managed to crack in Italy. However, it's not a very scalable solution. Although, again, the focus is always to work with small farmers and medium farmers. Sometimes they're very too small.
Perfect.
Thank you.
Thank you so much. Really appreciating all of your insightful questions and very interesting. Moving on to a question that we got in the form. Regenerative practice depends on farmers' adherence, commitment, and behavior. What happens if one or several farmers do not comply with the agreement? What risks does this represent for investors? Really great question as well.
Yeah, fantastic. Yeah, this ties in with one of the 3 pillars that we were discussing earlier, the permanence aspect. So, the permanence is what happens if someone starts following the practices and then abandons the program or abandons the practice. Within the carbon credit market or within a carbon farming project specifically, registries ask you to set aside a number of credits in something called a buffer. Okay, a buffer essentially is a form of insurance made up of credits, unsellable credits that are used in the case where, typical case where the farmer joins the program, generates some credits, and then within 3 years or 4 years abandons the program. So you will essentially have a loss, because if he abandons the program, you will have to assume that the carbon credit that he generated over the previous 2-3 years will have been lost. So you have to basically then use part of the credits set aside in the buffer to cover the loss. In our case, we've created something called a double buffer mechanism. So we have the registry 10%, 10% of the credits set aside by the registry itself. We have no access to those credits, but then we have created an internal buffer, also made up of another 10% of the credits matured by the farmer over the first to the fifth year. However, these credits, provided that the farm stays in the program and continues to follow the practices, then is distributed to the farmer. So it rewards long-term commitments. So basically, if of that famous 75% that goes to the farmer, we keep 10% in a, let's call it in a piggy bank, but then after the sixth year, after the end of the fifth year, so starting on the sixth year, we distribute the first 25%. And then we wait another 5 years, and at the end of the 10th year, we distribute another 25%. And then we wait another 5 years, and at the end of the contract, so at the end of the 15th year, we distribute the final 15%. So it rewards long-term commitment, and it protects the project integrity. Obviously, if the farmer goes away, then the 10% goes away, and the 10% is retired. Essentially, we don't have access to it. We don't use it. It's not sellable credit. We destroy it, essentially. We retire it from the market. It cannot be sold.
Perfect. Thank you so much for explaining so clearly. We have one more question in the chat from Thomas. Who does the carbon credit certification? On which criteria did you make your selection?
Hang on, let me read the question again. Who does the carbon credit certification? Oh, okay, I see. So in our case, is International Carbon Registry, which is an Icelandic registry, which is ICROA endorsed. So at the same level as Vera, okay, less well known, but in terms of integrity, it's the same. So I'll write it here for you. International Carbon Registry.
Thank you so much, Francisco. We got one more question. In some of the countries
Sorry,
you
Elena.
mentioned...
Apologies.
Ahead,
Sorry, the second part of the question that Thomas was asking, on which criteria did you make the selection? Essentially, we wanted a registry that was flexible enough to cover two methodologies in one. Because as I said at the beginning, we are generating carbon credits from both soil, so SOC, soil organic carbon, and above ground and below ground biomass. Usually, Vera or Gold Standard, which are the two biggest registries, tend to be very stringent on either one or the other. But because we had a very specific case in the olive trees, we said, okay, we want to promote sustainable farming practices that affect the soil where the trees can still be saved. And we want to be able to do reforestation or agroforestry where the trees can no longer be saved. So we needed the two mechanisms, the two combined mechanisms. And the International Carbon Registry was the only carbon registry that was obviously high value and ready to accept this combo of methodologies. So it's a very precise choice, but it was led by the circumstances of the project.
Great. Thank you so much for sharing. One more question we got in the chat. In some of the countries you mentioned, large part of the agriculture is held or managed by the government. Is there any involvement or adherence of the government in the program?
No, not in our program, no. Usually we don't. It's all private land, essentially. So the landowner has to be a farmer or a farming company, usually. We don't have any governments involved. We might have large association or large cooperatives, but nothing governmental.
Great. Just a heads up, everyone, we are in the last 10 minutes of the webinar, so please drop your questions in the chat if you haven't yet. We will wrap up in 10 minutes. Keeping on with the questions we got in the form, what is the plan for the future in the carbon removals and carbon farming regulation context?
So the CRCF regulation is just about to come out. The official guidelines. I mean, the guidelines have come out. We know we're fully aware of the regulation, but the actual standard hasn't come out. The one related to agriculture specifically, or to land use and forestry. The idea is that all registries, ICR, Vera, Gold Standard, will register with the CRCF so that they are essentially aligned with the principle of CRCF. This is what we're doing. In Italy, currently, we are evolving our methodology slightly to a newer version, and we were actually considering whether to do it under CRCF. So staying with ICR, but using, let's call it the principle of the CRCF. We are already aligned in principle. However, because the regulation is not out and it won't be out fully and the registry will not be aligned fully until Q4 2026, then we're waiting for the next cycle, which is likely to be 2027, so next year. But essentially all registries are now sort of registering with the CRCF, let's call it regulation body, and in order to be able to sell CRCF compliant credit under different methodologies, for example, Vera, Gold Standard, ICR.
Thank you, Francisco. Adding technology to land creates higher maintenance on the tech side. How does that affect the overall effectiveness of the projects?
Interesting question.
Mhm.
Adding technology, well, because essentially the technology that we use is mainly, I would say 90% remote sensing, there is no like physical gadget that's added to the soil, for example. Okay, there is soil sampling, but that's, a shovel in a sense to pick land. There is no meteor sensors or any other technology that's physically added to the soil at the moment. So how does that affect the overall effectiveness of the project? I don't know. I mean, in our case, I don't think it does. I don't think it affects the overall effectiveness. More technology usually is good in some ways, but sometimes you don't need that much technology, or you don't need to create new technologies to get to a result. I think in our case, I don't think that adding more technology will, improve the quality of credits. Obviously, now there is a whole, debate about AI and the use of AI in these kind of projects as well, which obviously has negative impacts. But besides, let's call it software, there's no hardware that's added on top. Just to give you maybe a nugget of info, the type of technology that we want to adopt is gadgets that help us sample land or sample soil more effectively and more quickly.
Yes.
But that's essentially where the direction is going, because obviously soil sampling done manually is very expensive, time consuming. We want to be able to speed up and improve accuracy by using technology. But essentially we're talking about a quad and a drill. There's no like magic or big infrastructure. Sorry, I hope that answers the question.
It does. At least I found it very, very clear. How do you see Esférico standing out among Spanish competitors? How could Radica embrace international differences in the way the law is employed in different countries to expand worldwide?
That's a complex question. To be honest, time will tell, but at the moment we are basically riding on the back of success that we've had in Italy. We're hoping that because it's such a niche project, it doesn't have to compete with big players. Big players do what they do. They tend to be, oversimplify methods and methodologies. We are very niche. We have, one of the most comprehensive farming protocol out there. We have 13 practices, whilst, the big projects tend to be focused on, for example, farms that are at least 50 to 100 hectares. We work with the small ones. So I think if we keep the spirit of, the niche, high quality, high integrity project, then I don't think there is enough competition, to be honest. There is way more land than there are projects in the end. So even the largest project today in Europe has 5 million hectares, across many countries. That's not big enough. We have hundreds of millions of hectares of land that can adopt these farming practices. So competition is only, I think, at the moment there is not enough competition, I would say.
Yes. Thank you so much. We are in the last 5 minutes, so now is really the time to drop your questions if you have them. If no question comes in, I think we have time for one more. Radica has chosen to build the entire value chain from project development and MRV to certification and commercialization instead of specializing in just one part. What strategic advantages does that give you, and what has been the biggest challenge in executing such an integrated model?
Fantastic question. Well done. Very good question. I think that it's all about controlling the data. When you're controlling the data, you're controlling the data quality, you're obviously controlling for quality, you're controlling for overall quality. It has been difficult for sure, but the way we've done it and the way we've done it over the last year or so, especially, is that Radica, or Alberami, the initial company, has developed a commercial model that works. We've created an MRV system that was fully compliant with the regulations and fully working. However, it wasn't, fully digital, essentially fully digitized or scalable. The way we did it, with the acquisition of Esférico was effectively to integrate technologies that was developed by a specialized party, a specialized digital MRV provider into an existing commercial project, which is the best of both worlds. So you have one that's very good at developing commercial projects and one that's very good at developing digital solutions. So integrating the two essentially is what we're hoping that it will allow us to scale and to keep providing these high quality integrity credits. But for sure it was hard to learn as you're going, because when you are the first, you are obviously leading. You're making a lot of mistakes, you're learning from your mistake, but at the end of the day, we've got something that's very niche and in high demand, luckily. So we're quite lucky.
Thank you so much, Francisco. I think that was the perfect question to wrap up this section. We still have 2 minutes, so if you have any remaining questions, you can drop them in the chat. Do not forget that your voucher is valid for 1 week, so it is a 20 euro voucher if you invest 100 euros or more. And we are available if you have any questions on how you can use this voucher. If you have other questions about the project, about Esférico's mission, please feel free to email us and we'll get you all the information. Thank you so much, Francisco, for your collaboration and for you have something to say.
Yes. Yes, just the final one. I am leaving my personal email in the chat. If anyone has any other questions, if anyone wants to ask me questions directly, if wants to have a chat, a private chat, I'm available. I'll say that I'm going on holiday tomorrow, so if I don't answer, I will answer in a week. But I will receive your question and I'll be happy to speak with you one-to-one about anything, potential partnership opportunity, farming, anything, question, technical question, whatever.
Thank you, Francisco. Amazing. Thank you so much for your collaboration, for the impact you are building with your project, and for your very complete and clear and inspiring answers. Thank you so much to everyone for joining. It was a pleasure, and I hope that you keep exploring the campaign and where it goes from here. If you have any questions, we are 1 email away. And thank you so much to everyone. I hope you have a lovely rest of your evening.
Thank you, everyone.